Good morning. I'm Harriet Agbinyi. Thank you so much for joining me on today's edition of Business Morning. We're live to you on Channels Television, your home for the news. And it's the last edition of the program for the week, and it's been a very busy business week. And of course, today, for the world, all eyes is on the U.S. as President-elect Donald Trump gets sworn in as a 4th or 5th President of the United States of America. Of course, the markets as well as investors are keeping their eye on that. We've seen topsy-turvy numbers ever since he was announced President-elect. And coming into today's swearing in, the markets are still in a tipsy-turvy. And as well as the oil markets as well. We'll get to all of those numbers much later on the program. But on the program today, we'll be doing a wrap of what has gone on this week at the markets, across the various segments of the markets that we track, talking about the fixed income segment of the market, as well as equities market and the energy market as well. And Bosun Omofaye, Channels Business News, joins the conversation much later on the program as we take you through still some of the, well, let's say it's in pursuit of green bonds. We started a conversation last week and yesterday on the program. Kayode Omoshebi, an investment research analyst with ARM Securities, talked a little bit more about what local investors will be expecting, and it seems to be a very good mix as well for most of the pension fund administrators as well as the banks and other financial institutions who will be looking at other ways of divesting their portfolios. So the green bonds conversation will continue in, well, much later on the program, as I said, with Bosun. And we've got various states of the economy perspectives that we'll be playing back. We'll be playing back at the Peter Side Atido, who is a chairman Stanbic IBTC, and he'll be talking about, as I said, views on forex policies, as well as other issues in the economy, and we'll be talking about entrepreneurship. And much later on the program, Rotimi Fakaijo, who is the CEO of Enterprise Stockbrokers and a trader with the Nigerian Stock Exchange, will be joining us on the program to give us a preview of the early numbers from the Nigerian Stock Exchange. At the time we'll be talking to Rotimi, Nigerian Stock Exchange will be set in continuous trade, so it'll be good for us to get a quick peek in and see what's going on. So you stay with us and follow the numbers with me, but let's start with some of the stories we're tracking at this time. Now, yesterday, the Nigeria Securities and Exchange Commission and the Economic and Financial Crimes Commission signed a memorandum of understanding to pursue criminal proceedings against individuals at the domestic marketplace. Remember, conversations with the Director General of the Commission, Munir Gwazo, last week pointed to the fact that the Securities and Exchange Commission wants to do more to ensure that the market stays sanitary, keeping the criminals away. So it's no longer going to be business as usual. 2017 is a year that the Commission has decided that it will bark and bite. Now, this deal with the agency will empower the regulator to proceed with several criminal aspects of multi-billion naira investigations pending against executives and officials of some market institutions that are already suspended from activities. Now, yesterday, at its first FGN bonds auction for the year, Nigeria raised a total of 214.95 billion naira in local currency bonds, with the debt sold at yields below rising inflation rate. Inflation, as at the last for December, as released by the National Bureau of Statistics, is put at 18.5%. Now, according to the Debt Management Office, 105.10 billion naira was issued for the bond maturing in 2036 at 16.99%, the 2016 bond for 74.9 billion naira at 16.99%, and it sold the 2021 debt note for 34.95 billion naira at 16.89%, but received a total subscription of 235.05 billion naira. So let's review how the markets fared yesterday from the FMDQ OTC Securities Exchange now. According to that segment of the market, investors remained downbeat, with average yield expanding about 6 basis points to close at 16.98%. But taking a look at the list of 4 of the top 7 FGM bonds as traded on the FMDQ OTC's market. You notice that the bond maturing on the 18th of March 2036 was the most actively traded with about 59 deals. Incidentally, that is the same bond that was offered yesterday by the FGN, by the Debt Management Office at its bonds auction. So that had a value of 13.35 billion naira realized with a price high of 76.30. And take a look at the others, the bonds maturing in July 2034, March 2024 and January 2026 also had investors trading, but with tepid movement. So we had price highs of between 76.71 and 80.65 recorded. At the end of the day, transactions came in at 221 and value was 80 billion naira. For the Treasury bills market, that segment of the market was also bullish as the bears resurfaced. Average yield contracted about 13 basis points. Remember that the Central Bank of Nigeria on Wednesday sold about 192 billion naira worth of Treasury bills in the 91, 182 and 364-day bills, and it had respective stop rates at 13.89, 17.25 and 18.65%, lower than what was previously recorded at the other auction, which came in at 14, 17.50 and 16.69% respectively. But of the 28 benchmark treasury bills on the FMDQ OTC's market, these were the top 4. Particularly, investors are still favoring bills, short-dated and mid-dated bills, as can be seen there, with the highest being the bill maturing on the 20th of July 2017, having a discount high of 17.55% and a value of 31.43 billion naira. At the end of the day, total value came in at 262.52 billion naira and deals done 885. So let's talk about where the equities market finished off. Now, the bears remained defiant as we saw the all-share index dropping about 0.2% to close at 26,201.60, and the market capitalization contracted about 15.1 billion naira to settle at 9.03 trillion naira. Yesterday's performance was dragged by losses in Dangote Cement and Nigerian Breweries, but market activity was mixed as volume traded fell 50.2% to settle at 196.46 million units, valued at 2.61 billion naira and exchanged in 3,317 deals. For the NASDAQ OTC's market, that's a segment of the market for unlisted securities. Notice that investors had improved appetite, but it was very marginal as we saw the unlisted securities index notching up 0.07% to berth at 622.90. Market capitalization came in at 421.53 billion naira. Volume and value looked a little bit better than where we finished off on Thursday, so that came in at 177,950 with a value of about 4.96 million naira, and deals done were 14. So let's keep talking about the state of the market. I'm being joined on the program now by Ibrahim Babalola, who is an investment research analyst with AfroInvest, to take a look at what will likely be shaping up as we round off the week and going into next week, when the Central Bank of Nigeria's Monetary Policy Committee meeting will be holding. It's the first for the year and not a lot of expectations from that particular meeting. But let's get Ibrahim's thoughts. Ibrahim, a good morning to you.
Good morning, Harriet. It's nice to be on your show.
It's great to have you join me on the program. So listening to me talking about all those numbers and looking at how the week started, give us your thoughts. Was it a good week or a bad week for the markets?
In the fixed income space, it was a relatively good week. It was not surprising. Our expectations came into play. We expected that the CBN would be very active in the primary markets with OMO auctions and the T-bills auction, in addition to the bonds auction by the DMO on the back of liquidity level at the end of last week. So our expectations expectations largely came into play. We had the OMA auction on Monday, where the CBN mocked up over 200 billion in 143 days and 297 days instruments. And then we had the T-bills auction on Wednesday and the bonds auction as well. Again, investors remain very, very active in primary issuance in the fixed income space, as most investors are playing in that segment of the market, as equities market remains downbeat, of course. So we had the T-bills auction oversubscribed, and the bonds auction was oversubscribed as well. But surprisingly, the 91 days and 182 days instruments were not allotted, despite being oversubscribed, as you mentioned at the start of the program. But the 364 days instruments was over allotted. I think the CBN offered 120 billion and allotted just over 300 and just over 193 billion, even though there was a subscription of 307 billion naira for that instrument. So investors have been subscribing at that segment, but because of the increased activity in the primary market, it has affected the secondary market. We saw a lot of sell-offs as investors are trying to free up liquidity to play in the primary market.
All right, and we also noticed that it seemed as if the markets were not too concerned when the inflation numbers came out, which were released by the National Bureau of Statistics on Friday, about 18.5%. So they started the week with so much like a shake-off and coming in more positive. Also, talking about the Naira, that's also seen a little bit of stability coming into this week.
For the Naira, for the stability of the Naira, well, at the interbank, not a lot has been going on in that space since FMDQ started quoting CBN stock rates as the interbank rate. So what happens is at the end of trade, when the CBN intervenes close to the end of trade, whatever rate the CBN sells dollars for, it ends up being quoted as the interbank rate. So we've seen a lot of stability in that space on the back of that. For the parallel markets, we've seen the Naira make some gains, minimal gains if you say during the week. This may be attributed to the resumption of dollar sales to the broader chain operators by the CBN. I think the CBN stopped selling dollars to BDC operators last December, but it resumed sales, so it does ease some of the pressure on the parallel market. So we've seen the Naira make some gains in that space as well.
All right, so it's the last trading day of the week, and we're, of course, counting down to the first MPC meeting for the year. That's coming up Monday, and, of course, the decision will be announced on Tuesday. Talk to us. What are the expectations from you folks at AfriInvest?
For the MPC?
Yes, for the MPC.
Well, from AfriInvest, we believe that the status quo would remain at the first MPC meeting of the year. This meeting we believe that the MPC members will use this meeting to review how last year's tightening has impacted on the performance of the economy. That's to gauge how much of the objectives they've achieved, how hiking interest rates, how it has affected inflow of foreign funds, has that improved or has that not improved. So these are the questions that they would answer, and of course how that has affected the FX market as well, and the performance of the FX market. Also, there's also going to be a conundrum during the year when inflation rate starts moderating on the back of high base effect from last year. Would they ease monetary policy MPR, monetary policy rate, when inflation rate starts easing? So these are the questions that they'll be discussing. But for the first MPC meeting of the year, we believe that rates will remain unchanged. Status quo will be maintained.
All right. Thank you so much, Ibrahim, for joining me on the program, and of course running us through perspectives from investment analysts there at AfriInvest with regards to the state of the market. Of course, we'll be back in just a bit, and we'll be talking still about the markets, but turning our attention to the Nigeria energy market. Stay with us.